Good afternoon, everybody. Welcome to JoshuaGaming.com. I am Joshua Gaming. I want to talk a little bit today about the Federal Reserve, specifically about quantitative easing. Yesterday, I talked a little bit about last week, the Federal Reserve's meeting, and some of the things they announced, how that affected the markets. And I really see moving forward another round of quantitative easing coming. So I want to talk about quantitative easing. A lot of people don't understand what quantitative easing is. You can go to my blog, go to my website, Google what is quantitative easing and find my video, and I explain what quantitative really is and what monetizing debt really is and some of these things. But basically what quantitative easing is, the layman terms definition is it's printing money and injecting that printed money into the economy. Now they don't actually print like $100 bills and drop them from a helicopter, at least not yet. But what they do is they print money and then they take that newly printed fake currency and they go out and buy things, treasury bonds, mortgage-backed securities, whatever, and it injects that into that system because then those mortgages get taken out and the currency supply exponentially increases when you add fractional reserve banking on top of that. You can see what happens if the Fed takes $1 trillion, buys $1 trillion in mortgage-backed securities, and then that means all those loans are now being able to be created, which means all that loans funds are going to all these sellers, which means all these sellers then have all that money which they deposit into their bank accounts. The bank then takes 90% of that money and creates new loans with it. And I don't know if you're still with me or not, or if I might have just lost you, but basically, if the Fed injects like $1 trillion into the economy, they're actually going to inject tens of trillions of dollars because that's the way our debt system works with fractional reserve banking. So it's pretty crazy stuff. By all means, post comments below if you have questions about that stuff because it can get pretty in-depth. Go to my blog or my YouTube channel and check out old videos because I do fundamental videos from time to time where I explain, what is quantitative easing, like we're going to do in a minute, or we've done in the past. What is fractional reserve banking? What is a bond? What, these things. So I'd like to do more of those, but I need some feedback on, what people are wondering about, what people want to know about. Anyways, getting into quantitative easing. The easiest way to look at the economy when you're talking about these things is to think about the economy as a balloon, right? So the balloon gets bigger when more value is created, and it gets smaller when less value is created. Okay, so when it's getting bigger, we have an expansion, we have a boom, and when it's getting smaller, we have a contraction or a recession. Okay, what we have right now is a hole in our balloon, a hole in our economy. That's why we're in this mess we're in. And to avoid the balloon from a complete collapse, we have to add air to the balloon, and we do that by GDP, by producing value, creating things, all the goods and services that we create as a country. Right now, it's debatable whether the balloon's staying the same level, whether it's contracting, or whether it's actually still getting small, even with the injection of our GDP. And because we're not putting, I mean, let's face it, the economy is still getting worse, right? We all know it. So even though they come out with all these funny numbers and say we're out of the recession, we're growing and stuff, we all know it's still contracting. That hole's still there. We're not filling it. We're not adding as much air as is coming out on the other side, right? We get that on Main Street, okay? So the other thing the Fed can do is they can actually inject air, and they do this by printing dollars. So the difference, what they're doing is they're just injecting dollars. There's no actual real growth behind that. So you can see what it's eventually going to do is just diminish the purchasing power of the dollar because it floods the supply, right? It's just supply and demand. If you have more paper dollars, like if you add more dollars to the game of Monopoly, and just play with bigger numbers, like each dollar gets devalued. Because you're not making the actual game bigger, adding properties, you're just adding money. Well, it's the same thing in real life. We're just adding banknotes with no real asset behind these banknotes, and so what it does is people that have money, they actually become losers. I think I'm getting ahead of myself because I'm actually getting off on tangents, getting away from my notes, but some things I wanted to touch on with in the first two rounds of quantitative easing in the last 2.5, 3 years, Fed's injected roughly $2.25 trillion into the economy. Getting back to the fractional reserve bank, and I was talking about that. Think about that and how much the currency supply has really grown in the last 2.5, 3 years. But we know it's at least $2.25 trillion just on what they've injected, let alone that money supply being expanded furthermore by fractional reserve banking. So that's pretty crazy. They did Operation Twist, which basically they just changed the pressure on interest rates to encourage long-term loans, refinances, stuff like that. The reality of it is it hasn't seen much of a change in the lending market. People are talking now about QE3, QE 3.5, QE 3.72. Again, they're going to print money out of thin air. They're going to go buy something else. I don't think they're going to buy treasuries again because treasuries have low rates right now. They're doing that so they can sell the treasuries. So I think they'll probably buy mortgage-backed bonds and put it in the mortgage market, sell more loans, try to get that going again. That really creates a lot of money and gets it flowing around the economy. Reality of it is they'll still eventually devalue it because you're doing it with dollars that you created out of nothing. But in the short term, that could work. Makes all of our money worth a lot less. Okay, with the hole in the balloon that there is, if the Fed quit injecting money and just let the air fall out, and prices would just fall, and savers would be rewarded because their dollars would go farther. They could buy more things with all these falling prices and buy more assets. Instead, Federal Reserve injects all this money, and the people that save, because it devalues the value of each dollar, the people that save are actually punished, and they can buy less with what they've saved. It's crazy. They're desperate. They'll devalue the dollar. I think the next one that's coming is going to be at least $1 trillion. I've heard Harry Dent say he thinks at least 600 billion. It's going to be big, right? So, at what point does all of this get away from us, right? You have a balloon and you're filling it on one side, it's coming out on the other side. At what point do you mess up and it runs away from you, and all of a sudden the balloon just gets so big it pops? That's what's going to happen with creating all this money. Now, at some point, I don't know at what point it's going to happen, because it's really been a slow process. And then, so you talk about reserve currency status and all the things that you've been hearing about, and I've been talking about it for the last year, with China pushing to replace the dollar with the yuan as the reserve currency. All these things, really, the currency movement since the 70s, when we took the dollar off the gold standards, has, basically we've manipulated our currency, and so there's been a fight ever since then for other countries to replace the dollar, and now there's trade going on between China, Japan, Russia, India. There's other countries now without the dollar where they're trading things back and forth without converting their currencies to dollars before they do the trade. And so that means that the world's moving away from the dollar as the U.S. currency, and for Americans, that's terrible. So it's kind of the road we're on now. Like I said, it's been going on over the last 40 years, but over the last 12 months, it's really accelerated. So I don't know where it's going to take us in 12 months from now, but certainly we'll be talking about it here. So leave a comment below, and let's talk about this stuff as it happens.